So Arjun, you're going to moderate a panel about Web3 with Samid from BitMint, Felix from Netopia, Nikola from Electrocoin, Eliad from Coriunder, and with David Birch, the one and only David. Guys, the panelists, please come on stage.
So I guess good evening, and thank you for all of you who've stayed back. I know it's a long day, but trust me, I've got 5 amazing panelists. We literally ran the entire panel outside. So I think there's a lot of interesting insights to give. Our topic is, simply put, Web3 in finance, which is anything and everything, because who knows what Web3 is, right? So let me start with that question. Sorry, hold on. Let me first ask all the gentlemen to introduce themselves very quickly. Gentlemen, 10 seconds each.
Hi. Hi, I'm Nikola. I'm CEO of Electrocoin, which is a crypto brokerage and payments processor from Croatia. So we process, you can basically buy anything in Croatia with crypto, and we support that.
Can you hear me?
Yeah, yes.
Amnon Samid. I have a mustache here, I don't have. I'm CEO of BitMint. We are dedicated to develop theoretical and practical solutions driven by AI for digital inclusion, digital transformation, digital currencies, tokenization, Web3, all the topics that we are going to discuss on this panel, and everything is quantum secured. Thank you.
Everyone, my name is Eliad. I'm the founder and CEO of Coriunder. We're a financial orchestration platform for financial institutions, from banks, crypto exchanges, EMIs, acquirers, and such. We handle orchestration on different levels, and among other things, also Web3.
Hi, I'm Dave Birch. I'm working on a low-code, no-code, AI-powered quantum orchestration platform in the cloud. Any day now, any day now.
Felix, CEO of Netopia, payment processor here in Romania, doing everything from cards to SMS to crypto.
Great, guys. 2 ground rules, right? 1, let's not bring the conversation back to me at all. Have a discussion among you 5. Secondly, please be sharp and short with your point of views, because we do want to cover as much ground as we can. Eliad, let me start with you, right? The word Web3 in financial services, what comes to mind?
I think everybody thinks straight away about cross-border payments. For me, it's the cross-border with financial inclusion as well. We see a lot of implementation using stable coins, transferring funds from countries like Mexico, Africa. But before that, with the traditional financial infrastructure, it was very problematic to take money out of it. And suddenly we see providers are willing to accept European merchants or account holders on that part, and literally opening up new projects on that part. So super interesting. And the digital identity, that's always come close to heart, even speaking in Banking 4.0 4 years ago about that. So that's the first thing that kind of triggers that for me.
So he's wrong.
Always.
Oh, you said be sharp, yeah. No, I did, Web3, I don't think it's got anything to do with financial inclusion. That's a completely separate issue. And I think cross-border is unrelated to the core technologies. Web3 is about tokenization and the exchange of tokens through smart, I know they're not smart, contracts, I know they're not contracts, which we can label decentralized finance. So Web3 is decentralized finance. We might use Web3 to try to achieve financial inclusion. Personally, I doubt that, but I mean, we could approach it like that. And we might use it for cross-border payments, but that won't be what drives it, I don't think.
That's driving says what comes to mind for me when thinking about Web3 projects. So that's the things that we see them right now. It's an opinion. That's exactly what he asked.
I will give you just a very brief one statement. For me, Web3, it's the market response to the lack of reaction on behalf of the financial system for the 50 or so years since everything started to become digitalized. And market requested some things, and they were not there, and now Web3 comes to solve some of the solutions of these problems.
Okay, but now I have a bigger microphone than you, so...
But I can go and find an even bigger one. I can find 2 microphones.
They have one.
I like how this discussion is going. I really like your answer. And I will add to that, Web3 is what you get when you lock up 1 million of hackers for 5 years in a room, and they have financial problems, and then they don't know the proper way to do it in COBOL using card rails, and they just come up with a completely new financial system.
Well, but they're not coming up
For
with
me,
a new financial...
Web3 is a lab for everything I want to see in the real world.
I don't think they are coming up with a new financial system. I think what they're doing is rediscovering the old financial system, but doing it in a slightly more efficient way. Because they don't understand the history of finance, they don't understand where the institutions come from or why they exist. The natural thing, like if you're 12 years old and you've just read about Bitcoin, it's like, oh, we don't need central banks, we don't need banks, everything's gonna be great. And then, you know, your grandmother presses the wrong button in an email and now her house belongs to someone in Vladivostok. And then you think, well, hold on, maybe we do need some kind of intermediaries. So I think it's about creating a more efficient, more effective, a better financial system. But I don't think they're inventing it new. I think they're reinventing.
I'm going to pick up on this.
What? Who are you?
The guy who just made it.
Can you use the mic?
The guy
Use
with
the
the
mic.
Two moderators here.
Use the mic.
The smartly dressed guy at the end of the corridor. No, but
you don't have your glasses. I know you can't see me.
Arjun, can you take a mic, please? Because we cannot hear you. Yes.
You can't? Sorry. Okay. So let's use that efficiency as a segue. Amnon, I'll start with you, right? Web3 came, blockchain was the poster child. Now the Web3 guys have even taken AI under the wing. But let's go back to blockchain. What benefits are you seeing from an efficiency, transparency, all those good things which we had in the past apparently and we lost in the middle, which are coming back, that you're seeing in real life taking shape?
Okay, in very short, I'll say that we took all the benefits of the blockchain without the pitfalls, and we developed the level playing field, which is doing everything that blockchain, Hyperledger, and so on is doing on the good side, and has on top of it more privacy, quantum security, less cumbersome validation, consensus mechanism without consensus mechanism, enabling P2P, direct payment. Money and any value should be either by the payer or the payee. No with any intermediator. This is the future. And since I mentioned before we are practical, what I'm saying is proven by building, working projects that passed banking stress tests. So blockchain brought to us the value of freedom, of privacy, and not being dependent on central bankers or some centralized authorities that will control everything. Centralized authority should maybe issue if it's currency. Private authorities could also issue stable coins, any tokenization of assets or real world assets. But the transactions, the validation should be centralized. It's something good that blockchain brought. It's not efficient enough, but it should be, as I've said, it could be more efficient, transparent, yes, quantum safe, yes, more instant, less energy consuming. Blockchain requires a lot of energy. Of course, AI gen much more, but it could be much more efficient, and much more of the operation should be done by the trader's phone. For example, if you have a token and you want to split the token with blockchain, you cannot split the token without the network. The solution should be that the trader itself, the user, with a mobile phone, I have a token of 100, no matter if it's LAI or euro or real estate, representing a value of a real estate. I want to split it to 2 or to 2.25. I need to do it immediately on my mobile, without any server, any network, any intermediator. It's fast, it's efficient, more secure, less energy consumption.
But that requires
blockchain does not allow it.
But that requires a hardware secure element. You can't do that in software. That requires hardware.
No,
If you want to do
no,
offline...
no, one moment. I did not talk. If you are in fully offline, of course, it requires a secure element. But the split, you don't need secure element for the split.
No.
For the transaction, if it's fully offline, of course, you need a secure element. But on the other hand, all the existing secure elements are not secure because you cannot rely fully offline on any cryptographic dialogue. You cannot. So everything you see in India, all the offline in India is not secure because it's not fully offline. Settlement is later.
Yeah, but I will disagree with you that you need to be online to validate cryptographic proofs. So there are protocols that can validate things on an offline, fully offline
I'm talking
manner.
about the split. No, I talked about the split. You don't need the network.
Okay,
Validation, you need a network.
Yes. Let's take that offline. I'm going to go to Nikola. Nikola, we're going to pick up on tokenization.
Can you use the mic? Arjun, can you use the mic, please?
Sorry. We're going to, I thought I was loud enough.
They liked it better when they couldn't hear you.
Well, that's true too. So Nikola, let's go to tokenization, right? So let's first start with tokenization of financial assets, right? What's the trend that you're seeing towards that? How is that actually reshaping investments or the whole investment sector, right, now and the foreseeable future?
Now, it's not really, because there's so much regulatory uncertainty at this point. So the incumbents are really slowly tapping into all of this space. In the future, I see a lot of potential. I mean, okay, I'm biased because we are also building a peer-to-peer tokenization platform, and we as a company are issuing our debt on blockchain and dog-fooding it and finding investors who want to invest and do peer-to-peer trades of our debt. So why we are doing that on blockchain? Because if we want to issue a bond, we need to find a broker that costs money. They need to have a license. We have a T+2 settlement, and we need to, for instance, the first time a Croatian company issued a bond in Germany, they got fined because of the regulatory overhead. We can do that on blockchain without having a licensed broker issue it. We can structure our debt document that it can easily be put on the blockchain. Owners of our debt can then trade it 24/7 instantly, and it gets cheaper and faster for everybody. Once the incumbents realize this, BlackRock is already doing that, slowly, but they are. So I guess that in future we'll see really a big adoption of this.
In general, I think that tokenization is a good way of trusting math to do a lot of things that previously were not possible. And starting from dividing like property titles, and you can have a property title that is divided between thousands of people and it's stored on a distributed ledger, and going to ownership of any kind of physical object, and even going as far as digital identities, not necessarily dividing digital identities, but the moment you have digital identities, everything around tokenization becomes more easier, even from the compliance point of view.
Okay. Tokenization will be much more efficient if you have the split capabilities I mentioned before.
We'll come to the split capability in a minute. But the point, actually, I don't think we will. But the point about digital identity, I don't think that will be tokenized, and the reason for that is that tokens are meant to be traded, and digital identity. You made the point about the key role of digital identity. That's about the wallets. That's not about the contents.
The point I was making about digital identity was about Sybil resistance, not necessarily.
Right.
Yeah.
But to imagine that we're going to do. I mean, and I am a big fan of digital asset. I think this is going to be the next generation financial market infrastructure, without a doubt. But it's not going to be without institutions and regulation. There's a reason why you want bond issuers to be regulated. I can give you one very straightforward statistic, and I know it's from the US, not Romania, but I'll give you one very straightforward statistic. In the 5 years leading up to the formation of the SEC in 1933, the average return for an investor in an IPO was something like minus 70%. In the 5 years after the formation of the SEC, the average return to an investor in an IPO was about 5%. In other words, if you don't have regulation, insiders rip the faces off of everybody else. And there's some American exceptionalism to that. Americans are like very caveat emptor. It's like, well, you should have read the rules, you should have understood what you were investing in. We're Europeans, we don't think like that. We don't think people should have their faces ripped off like that way. So we want strong regulation of that. That's not going to take away from the efficiency of the digital asset infrastructure. It's just not going to be the Wild West.
I completely agree. That's not the overhead I was talking about. Issuing a bond is regulated, and whether you put it on blockchain or not, it's regulated in the same way. Where we see overhead is primary and secondary markets. Because if I sell you a stock peer-to-peer, then it's one relationship. If I sell it to a broker and then you buy it off of a broker, you need a license, brokerage license there.
Yeah, I agree with that.
That's the overhead.
Yeah.
If I want to issue my bond to you, there's no regulatory overhead. If I want to allow trading of it in the secondary market, there's a lot of regulatory overhead, and all of this can be stripped by simply tokenizing. But no, bonds have to be regulated. That's 100% clear.
Okay, so let's move to tokenization of real-world assets, right? Which is, I think, one of you alluded to real estate. I think you did, right? So since you guys all of you like to talk, let me just pose 3 questions in simple ways. One is the whole opportunity with tokenization of real-world assets overstated? You know, we've got huge numbers like 30 trillion, 20 trillion, which are going around. Secondly, there is an increasing debate going on, which is tokenization of real-world assets for institutions really makes no sense. They don't really care about it. Please argue for or against it. And thirdly, if I may just pose the questions, what big challenges are you seeing beyond just technology and mindset, right? One being possibly the legal frameworks which have to come along in terms of the adoption of tokenization of real-world assets. It's open to all of you. One of you can kick off and then please pick it off.
For me, the accessibility, let's say, when we see demand from our customers, so we use platforms like Tokeny, that gives us that accessibility for direction, let's say, giving the customer both, we give him the financial access to his fiat accounts, his crypto wallets, etc., but Tokeny gives him the ability to access his tokens on the networks depending on which type of assets he wants on that part. And that's the demand we started seeing from our banking clients. Suddenly waiting, let's find a solution on how to make it more accessible to our clients. They're asking us to give them the same banking experience they have within the interface, but also for their tokens. And I think platforms like that kind of centralize different access to different tokens is the way to go about it. I'm a tech guy. I think all of us are touching the tech, and the accessibility is only finding the right partner to do that makes it more accessible, and then to embed it within the different interface.
I think that the opportunity that comes from tokenization of real-world assets, it's giving a new class of investors, or maybe a class of investors that is the most predominant and it's the most vast out there, access to opportunities that today are available only to like a very select few. And this access will also give the owners of these digital assets proper ways or new ways to liquidize and make liquid investments that otherwise they might struggle to, you know, offload or to do anything with them.
I would like to give an example. During the COVID-19, I was working in Hong Kong. I'm still working there. Many rich people that have a lot of real estate needed liquid money, did not have. And they did not find a way to sell part of the real estate, of a building. With tokenization, you can do it. And if I buy part of it, maybe I want to trade with someone else. So we need an instant P2P trading platform with any part of any real estate, real-world real estate. This is one of the use cases. Another use case, HSBC is offering now tokenization of gold. So you keep the gold, I don't know, at Brinks or whatever. You don't have to take it out if you buy it and sell it. You trust on Brinks that the gold is there, but we can trade with digital claim check on the gold. This is also tokenization.
It's just an interesting, I mean, it's nothing to do with the conversation really. I worked on a project for one of the world's biggest gold miners. And I won't say what but I worked on a project to try to work out whether the tokenization of gold would mean more demand or less demand for physical gold. And my view was that because you can already see the premium on tokenization for US dollars, my view was that there would be a premium on tokenized gold because it was more flexible. So actually the tokenization of gold would drive up the demand for physical gold because more people would hold gold tokens as part of their portfolios. So I think opportunities like that are fantastic.
But we're actually seeing that
So
already.
finally we
like
agree,
India.
David. Finally we agree on something.
Doing what, sorry?
Finally we agree on something.
Yes, we made it. We made it.
Just a quick curiosity.
Yeah,
In
but you
Croatia,
can't split
you
the
can
gold,
you
though,
can pay
that's
for bread and milk with tokenized gold because our payment processor has Paxos Gold listed, and you actually can buy
Yes.
bread with gold.
I was going to say that. So you're actually seeing, and actually in countries like India where digital tokens of gold started a while back, you've actually seen the demand for gold actually coming from corners where utility of gold even in a country like India is actually reducing.
Well, also it's safer. There's a very interesting case study from the UK because, and it's a cultural thing, but because the Indian population in the UK hold a higher proportion of their wealth in gold, they tend to hold it as physical gold, which means they're subject to more robberies and burglaries for the physical gold. So you could argue that actually...
So we're seeing that switch in India already.
Yeah. So the tokenized gold is actually safer for the community as well.
CBDCs, next topic, right? So again, I'll open a few questions and you guys. Obviously, it's gaining traction. Apparently, I was reading 98% of the world's GDP, or the central banks, which are controlling 98% of the world's GDP, 120, 130 countries are exploring CBDCs. The very vast majority of them are doing retail CBDCs. First question, do we need retail CBDCs, right, at all?
So
Secondly, the use cases that you see for wholesale CBDCs.
I'm going to immediately split your problem into two, because I think, see, I can do this as well, you see. So, because actually there are two different issues being jumbled together here. So there's, do we need a central bank digital stable coin? And for that, I think the answer is yes, we do. The demand for stable coins, it's unequivocal. You can see it in the markets. The premium on US dollar stable coins over US dollar assets or US dollar commercial bank reserves is significant. In countries like Turkey, maybe it's 4 or 5%. In other countries, it's 20, 30%. So why the US won't issue a Federal Reserve digital dollar, I have no idea, because that's billions upon billions of dollars that will become an interest-free loan to America. It's crazy not to issue that. So a central bank digital stablecoin, absolutely. A central bank digital currency has slightly different goals, and this relates to what you said earlier on. If you're going to have a central bank digital currency, if it's going to be a project of, essentially the Romanian state, it has different goals. Its goals include the things that you were talking about: inclusion, more efficient remittances, these kind of things. The design principles for a digital currency are not the same as the design principles for a stable coin, and I think this is where it's gone a bit crazy. Because almost I read this stuff all the time. Every central bank is doing these experiments with central bank digital currencies, and they're all meaningless. We learn absolutely nothing from them. The Swedish, I was reading the Swedish one, the Swedish central bank's report on their experiment with central bank explicitly says, we learn nothing from this because we're never going to implement a central bank digital currency as a stable coin on a ledger and blah, blah, blah. So I think it's a fascinating topic, but I think it's two different topics.
To pick up on the Swedish thing, I also want to mention that the Swedish National Bank, the Riksbank, said that they will not get rid of cash, even though 90-something% of the transactions are done within their Swiss system. And second is, I think that today the role that CBDCs would be played in the future is very well played by stablecoins. So I would venture to ask why, if this works, why do we need to replace it?
Well, I'll give you a straightforward example, which was already mentioned, which is if you're going to have a central bank digital currency in a country like Romania, or for that matter, in a country like the UK, it has to work offline. You live where there are mountains and in excess, it has to work offline. A central bank digital currency has to work if the mobile network goes down, if there's no internet. I have to be able to go to the store and buy some milk. if the systems are down. That's not the goal of a stable coin. A stable coin is very different. And that's why in my head, they're very different things.
We have 1 minute, if I can say
1 minute,
something.
if you can wrap up. It's still 1 minute left.
Oh, we were just getting started.
If we're discussing, if we need...
Okay, we'll finish this off in the car park outside.
Yes, the bus is waiting.
Like real men.
That's why I'm trying to finish the panel. Nikola, go ahead.
So if we're discussing, do we need CBDCs, I think the most important part of the question is missing is who are you asking that? Because if you're asking ECB, they have answers. They have a very good answer to that question, but they're not stating publicly.
But the ECB are listing, their answer is based on what the commercial banks want. They're going to do what's best for banks, not what's best for society.
Exactly. No. I mean, we had a CDBC panel with commercial banks and the head of the Digital Euro project, Evelyn Wilcox, in Zagreb last year. We had an open discussion about it. Banks don't want it. ECB wants it. Why? Because they want monetary sovereignty. They want to get rid of MasterCard and Visa.
Well, it's a political project.
It's a political project.
Yeah.
Will you give me 1 minute? 1 minute.
The thing is, if you didn't privilege
If you give me 1 minute, I think I have more experience in CBDC than everyone in this.
Let's make it 5 seconds.
We're out of time, guys.
I have more experience in CBDC.
We're out of time.
In building, did you build any CBDC?
I worked on the first
guys.
CBDC.
When?
It was the Mondex project.
I love it.
It's
That's
not
why we
CBDC.
invited those guys.
This is
Yes!
not CBDC.
Oh, yeah.
This is not CBDC.
Arjun, I leave
Guys,
you the last word.
8:30 in the morning. If you want this conversation to carry on, we'll see you same place at 8:30 a.m. Most of them might be in their pajamas, but I'll show you the conversation might be interesting. All right,
Indeed,
so thank you all.
tomorrow 8:30, we start at 9, and we have the book signing tomorrow morning, right, David? So bring your book and your best arguments, because the guy will argue with you for everything. So thank you so much.
Thank you,
Great
everybody.
panel. Thank you, Arjun. Amazing.
Thank you.